Hi, welcome to the Market Alert for Wednesday, the 5th of May 2021. So stocks extend their losses after Yellen says that rates will have to rise. That's interesting, isn't it? Because the day before, Powell said he wouldn't increase interest rates, but would go for the option of tapering the QE to counter inflation. But Yellen has said that rates will have to rise. This spooked the markets and prices moved lower. I mean, again, the old adage, sell in May and go away, certainly came into being yesterday for the European markets. Futures slide, tech weak on rising inflation fears. Banks start freaking out about soaring inflation, which may not be transitory. Of course, it's not going to be transitory. I mean, when have you ever seen prices come back down, apart from silver, which they like to slam, which we'll look at shortly. Sam Zell buys gold to hedge against surging inflation, debasement of dollar. So it's the same theme all the way through. And as Peter Schiff rightly says here, CPI is a lie. Said this for years, been accused of being a conspiracy theorist. But you only have to go through the data in the UK and have a look, see what they put in the inflation basket. And when there is lip gloss and disposable cameras, when there's a camera on everybody's phone, it's easy to keep the numbers low, isn't it? I mean, how many of them are you going to sell in a year? So it is smoke and mirrors, sleight of hand, whatever metaphor you want to use with these governments and central banks. It's the way they operate. We know this. There's nothing new there for the likes of those that know, such as ourselves. Let's have a look at... this is an interesting one as well, just to finish off with this. US launching 5-digit digital dollar pilot programs. Over the next 12 months, a select group of Americans will have the honor of transacting with the next evolutionary US currency, the digital dollar. How to track all of your spending, let alone COVID passports. You're going to be tracked with every penny you spend. I can't understand why people can't see this totalitarian, dystopian crap unfolding in front of their own eyes, and they just go along with it all. It never ceases to amaze me, but that's where we're heading. Implied volatility yesterday, as you'd expect, 1403, 1479. You'd expect this to be higher, but wait till you see the daily chart of the Dow. News today, what have we got? It's Wednesday, so there's not a lot there. We've got the ADP at lunchtime. That might boost prices back to the upside, but other than that, it's just economic forecasts. And then we've got crude oil just before we close on the DAX at 3:30 p.m. now. So let's have a look at the Dow for yesterday. We'll start off with the daily chart. Incredible. I mean, talk about sideways. Look how they brought the market back yesterday to maintain the sideways trading channel, and volatile at that as well, of the Dow yesterday, bringing it back to the all-time high on the overnight market, but so far failing to hold and moving back there. But you can see they're desperate to get this market back up to the highs and through it. Quite a remarkable feat. But then when you've got the central bank, the Fed, behind you're moving the plunge protection team, it's not a big deal, is it? And here you can see that the Dow opened up, sold off, we had a bit of a bounce, and then once we got to 20 past 4, that was the end of the move, and then it was just plunge protection assisted all the way back up, as you see these areas of support and buying back. And actually I'm going to show you this. I wasn't going to, but I will. I've been working on a new supply and demand indicator, and you'll see that it places on the chart where they're buying in the market, where they're stopping the market on the downside. You'll see where they're supporting and where they're actually selling as well. So you'll see here, so you've got the selling coming in, the demand, selling, demand. There's some selling in the up move, and the same there and the same there, but then you'll see them buying back in for the last bit, some profit taking, etc. And this is how this indicator, they're not buy and sell points combined with other areas. You can see where and highlighted on the chart where the selling and buying comes in at these places, something that looked at for years and now able to start getting into the chart. So it's still a work in progress, but it highlights the areas, as you can see there quite beautifully, where there is selling in up moves and buying in the down moves to assist with taking profits off the tables. So let's have a look at the DAX. This is the DAX for yesterday. Daily chart, you can see absolutely hammered to the downside. I had to redraw in from this low to this high to find some new fibs. We went straight through 38, stopped and 50, and stopped at 62% during yesterday afternoon. But the market at the moment attempting to move back. And if there is nothing in the way today as far as news, and it is good news, then we can see a reversal in this. It wouldn't be the first time that this has happened in this market. So that's what we're seeing there. Overnight, that was yesterday's session, which we'll look at in more detail in just a moment. But overnight, you can see prices gapping because the Dow had moved higher and gone back to the all-time high. The DAX nowhere near it. But you can see there at the moment just sitting at the 200 MA, and if I compress the chart, you're going to see that the high is a long way on this chart. In fact, it is 100, 200, 300 points away to the upside for the German DAX compared to the Dow. On the downside, it's just 100 points lower for the DAX to take out yesterday's low here, and 62% to move down to the 78 or the 89 should prices once again move sharply to the downside. But expect a bit of a move up in the futures. They'll do the best they can to bring this back, and given that the Dow is sitting at these highs, I'll find the daily chart, sitting at these highs and attempting to go through, then I wouldn't be at all surprised if there's the drag effect, the slipstream of the Dow bringing the German DAX to the upside. Meanwhile, in the metals, yesterday we got to $27 just through. Let me give you the high for yesterday. I've been expecting the slam. Well, it's starting now, so here we go. Yesterday they came in as soon as it got through 27, and they just monkey hammered the price of silver all the way back down. And don't be surprised if we don't come back down to this sort of level here over today's and tomorrow's trading session. Now, given the backdrop with all of the inflation and everything else, I don't see this as a problem, apart from it's just blatant manipulation. Give me the opportunity to buy some more silver, not a problem. I'll be quite happily do that. Any pullback we're going to get, because when you see the price of goods increasing at the exponential rate, as we've seen plywood 6x4 boards going from $38 to $252 and no end in sight to the price of lumber, it's a no-brainer. At the moment, the banks are short. There's 8 banks. They're all currently short. Once they switch position, it'll be trying to stop it from going up. But until the central banks switch sides or allow the banks to switch from this short and slamming prices, then it's going to be a case of the manipulation continuing, and blatant as it is as well. So yesterday you will see what they did. They came in and they said, no, we can't have it above 27. No, that's not happening. And immediately just monkey hammered the price down. It did recover quite well, but you can see it's rounding over now. When it starts to round over, it's a no-brainer. It's straight down to yesterday's low. For me, and if I sound pessimistic, it's this repeatable pattern that we've seen for years. If it doesn't, well, it'll be a bonus. It'll be a bonus. And if it doesn't get slammed, then it will indicate that the 8 banks are switching from the short side that they have, the massive shorts, into the long side, again because of the inflationary pressures that are there. But of course, if you've got the opportunity to slam it to buy it cheaper, well, take advantage of it. And if they do that, then I'll do exactly the same. Like I say, no-brainer. They can do what they want. It's blatant what they're doing, and it allows us to take advantage of it as well. Okay, quick look at yesterday. I didn't get to monitor this as closely as I would normally because I'm working on the software at the moment with the programmer, so it's back and forth and picking up trades in between. So I will add a few more pointers into this, because unlike the other ones where I've shown you where exit the trade on these, I haven't done so because obviously I'm busy as I say, working on the new version of the software and picking up the odd trade in between as well. So yesterday morning we saw the futures market move prices to the upside from Monday, and then immediately they continued this, moving up to the previous day's close. You can see the battle going on as we got the market moving up. We have the retracement, we go back up, and then we're hit with selling as well, and then prices trading to the downside. There was a sell signal there, the market coming down to the DP area, which you can see there, and then just closing above the 5-bar area there. So an area where you'd expect supports, but not yesterday. 9 times out of 10 you'll get support at the DP, but yesterday they continued with prices moving lower, and this set the tone really for the rest of the day. Prices moving down to the S1 before finding some support. We get a cluster now here. You can see them buying back in this bar, and in the new software that will be a demand bar. Prices buying back, and then we get an 89% correction with the prices trading to the 20-bar moving average failing, and then moving back to the support. This time we see prices reverse, immediately hit by some selling. We can see the selling there, but the volume is greater than the previous bar's range. This one is less in range and then is hammered as well. Again, that will be automatically highlighted in the next version of the software. So prices then succumb to a bit more of a shakeout. That shakeout ends, and I'm going to carry on through the whole of the session today. Prices stuck at the BRN. There are more red bars than there are green bars. That weakness is now established, and again, mid-morning we have a change of heart and they attempt to bring prices back. So we see here prices more or less double bottoming there. Again, you can see that spike, not that it's a great deal, but it's certainly higher than the previous 2 bars, and in an area where we'd already seen some support as well. Prices come back, and then there's the move to the upside, and this is a really nice move back, nice and steady. And then guess what happens? We get as high as the DP or just beyond it. The US futures open and wallop straight down until we see support at the S2 here, and again we come back and we test, we double bottom there. Prices try to hold, they fail, and then they just slide all the way down to the S3. Now the S3 is an area again where 90+% of the time the market will stop. But on this occasion, there was no way prices were doing this. And if I'm just going to scroll back here, because I think I actually brought up the daily chart there, so you could see we were at 50% from this low to the recent high, and then we continued down to the 62. Once we broke the 50 when the market opened, we had a bit of a quick move to the upside. We see the selling coming in here as well, and the S2 resistance. The Dow went into free fall at this point, and the market then, if I just come back again, I think it was just about here, wasn't it? Perhaps a bit further over then. There we go, yeah. So you can see the 50% being taken out there. 62 is the next downside target, and prices then trade down to this level, as you'll see in just a moment. Sideways for a breather, and then again we had another short stuck in the sideways move, the long side obviously failing there, but again, just like we had in the morning session, you'll see that the volume is nearly as large as the previous bar, but less in range. So again, supply resistance to the left where we had some selling coming in, and then we let rip to the downside once more. And you see prices just moving down to the support, and then tested here. You can see the test there, increasing volume, and then prices trading sideways, and then of course the Dow coming back overnight and bringing prices, or in the evening, not overnight, all the way through the evening they came back, which is quite incredible, given the range of this bar as well, which is not inconsiderable. Let's just have a look from the low to the high, 300, just 400 points in that one daily bar for yesterday. So a volatile market for sure. Well, let's see what happens when the futures open. I don't know, they're not open for another 15 minutes. Just have a quick look, see what the DAX is doing at the moment. It's had a bit of a move to the downside, got a bit of support there at the moment at the 200 MA. We'll see what the futures do. I'd imagine they'll probably just try and move to the upside and then move back to the downside when the cash market opens. Okay, that's it for this one. If there is anything else to report, I'll let you know. But otherwise, as ever, thanks for watching. See you in the next one.